Hey guys, it's James and we are back with QYLG. This is the 7th ETF we have been analyzing in this way. We're going to analyze 30 different ETFs as well as any ETF that is suggested in the comment that is worthwhile taking a look at. What we're trying to do is to determine how much of these ETFs we need to own to hit that $1,000 a month in dividends. We also, in each of these videos, we also like to take a look at how they are reaching their dividend yield, what the fund manager is actually doing to be able to pay you out a dividend, what their historical yield has been. Then we come over to my compound interest calculator right here, and I know this can be a little overwhelming if it's the first time you've looked at it, but we're basically just looking at two different boxes. We're looking at this box and this box, but more on that later. We find out how much QYLG we need to own to be able to hit that $1,000 a month in dividends, and then to round it off, we compare it to an S&P 500 index fund. So today's ETF is QYLG. Let's head over to the fund webpage and try to determine what they are doing to reach that dividend yield number. QYLG is owned by Global X. It is their NASDAQ 100 covered call and growth ETF. Now QYLD was Global X's NASDAQ 100 covered call ETF. It did not have a growth portion. So let's take a look at their webpage. It says high income potential. QYLG seeks to generate income by writing covered calls on the underlying index. Well, if you didn't catch it from last video, what is a covered call? A covered call involves selling a call option, which is 100 stocks or 100 shares of a stock that you already own. By owning the stock, you are covered. If the stock rises and the call option expires in the money, a covered call is one of the lower risk option strategies, and it's even suitable for beginning options investors. Now, I'm not going to go in too much in detail what a covered call is. I'll probably do that in another video here in the future. I'm going to start selling covered calls myself and employing other option strategies on my it's around $70,000 to $80,000 portfolio that I'm going to share with you guys here in the near future. So stay tuned for that. But what is QYLG doing? Selling covered calls and having their fund grow. Well, here's just a little snapshot or a little explanation of what they're doing. They write the calls on only 50% of the portfolio. The strategy allows investors to capture half the upside potential of the underlying index. As well, over here, the last little tidbit is QYLG makes distributions on a monthly basis. But back here, what does this mean? By writing calls on 50% of the portfolio. Well, let's come down here and take a peek at what is their net assets amount. So currently QYLG is holding $63 million. So with QYLD, if we come over to QYLD's page, their assets under management is $6.85 billion, and they are writing covered calls presumably on 100% of the cash that they own, $6.8 billion worth of covered calls. Over back on QYLG's webpage, they have $63 million under assets. What they are doing is cutting that in half, and half of that, so what would that be, around $31 to $32 million worth, they're buying covered calls and receiving the premium from it, and the other $31 to $32 million, they are simply buying the stocks in the NASDAQ 100 and letting them go up or down as the stock market pleases. So if you take a look at their actual holdings, so their top 10 holdings are the same holdings in the NASDAQ 100, Apple, Microsoft, Amazon, Tesla, Google, ANC, Meta, Nvidia, PepsiCo, and Costco. So if you take even a closer look, Apple, out of that $63 million, $8.5 million of it is in Apple, $6.4 million of it is in Microsoft. So for Apple, they would only be investing half of that $8.5 million in call options, and the other $8.5 million, they are simply just buying Apple stock and letting it go up and down with the market. Same thing for the rest of the funds. Now, that is presuming that they just do straight across all NASDAQ 100 shares, all the shares that they own, they're going straight across and just doing 50% on each of the securities or stocks in the NASDAQ 100. That might not be the case. They might only be doing call options on 50% of Meta. It could be 25% of Tesla, 75% of Google A and C, 20% of PepsiCo, but overall it is presumed that 50% of their overall $63 million that they own, they're doing call options, and the other half of the $63 million, they're letting to grow with the market. So that's what QYLG is doing by writing cover calls on 50% of the portfolio. And this strategy allows the investors to capture half the upside potential by letting the other half of the portfolio just growing with the market. So let's take a look at QYLG's historical dividend yield. Coming over to Seeking Alpha, we take a peek at their dividends tab. Under their sub-tab dividend history, they have paid a dividend out all the way since October of 2020, and you can see it's been fairly consistent all the way up to about 16 cents down to 14 cents, and then in December of 2021 they paid $1.60. So I don't think it's fair to include this in the calculation. I think it's fair to keep that about 14 cents per month. So let's go ahead and calculate that. If they had 14 cents per month times 12 months, that is $1.68 paid out over the course of a year. So what is that in an overall dividend yield? Well, you can see that the price has fluctuated for QYLG. Over the past year, it has gone all the way up to 33. Their 52-week high is 34.20, and their 52-week low is 22.99. So what would a good average be for the price to be able to determine a good dividend yield? We'll take this $1.68 and divide it about the halfway mark, and you're looking at around $29. So we take this and divide it by 28, and you're looking at, multiply that by 100, more like a 6% dividend yield. You can't really take just take this number with a grain of salt. As you remember, their dividend payout was a little odd around December of 2021. So this figure right here is jacking up the dividend yield number artificially high to that 12%, even upwards to about 13 to 14%, where their real dividend yield is closer to around that 6% figure. So we'll use anywhere from 6, 7, or 8% on our calculation to be able to determine how much QYLG we need to own to hit that $1,000 a month. Let's go ahead and do that right now. Let's come back over to the calculator. Here is QYLG, and we calculated 6% on a conservative basis. It could get up to 7 to 8% depending on the price fluctuation of QYLG. So if QYLG was around 6.5% dividend yield on average, you would need $184,000 of QYLG to hit that $1,000 a month. Now, let's say QYLG was able to maintain an 8% dividend yield. Well, you'd need around $150,000 to hit that $1,000 a month in QYLG. At a 9% dividend yield with QYLG, you need around $133,000 to hit that $1,000 a month. So that's your figure right there for QYLG. Now, how has QYLG performed against a typical S&P 500 index fund? So we take QYLG versus SPY, 100% of each. We're going to see what it looks like reinvesting the dividends and going all the way back from the inception of the oldest fund, coming up on 2 years here. You can see that the SPY would have outperformed Global X's QYLG. But QYLG is mirroring the NASDAQ 100. So let's go ahead and take a look at what the NASDAQ 100 index would look like over the past 1.5 to 2 years. And in the yellow is the NASDAQ 100. In the blue is QYLG, and in the red is SPY. So QYLG does outperform the NASDAQ 100 index. So writing those covered calls on 50% of the portfolio, allowing the rest of the portfolio to grow, does seem to beat its comparable index. So there you have it, QYLG. Depending on the dividend yield from 6% to 9%, you need about $130,000 all the way up to $180,000 worth of QYLG to hit that $1,000 a month in dividends. head down to the comments. Let me know if there's another ETF you want me to analyze in this way. And with that, thanks for watching.